Good evening, wizards, and welcome to episode 7 of the Crypto Wizard podcast. Now, I hope you guys are having a good week. It's been an incredible week for trading across the Forex and crypto pairs as covered in the Telegram, Instagram, and even Instagram Live. So I hope you guys have managed to take some profits off the table. I think that's the first and most important point I could start with is if you have made some profits, whether significant or small, go and treat yourself this weekend. Well, potentially moving into the next week now. Just treat yourself regardless. I think it's so important when you are trading. Again, a big psychological factor that I could have mentioned in a lesson, but I will just kickstart off with. Following the week that we've had in terms of profits, we haven't really had any losing trades now for pretty much the majority of April. For the CryptoWZRD Telegram, that is anyway. So if you actually go back and look at all the calls and all the projections, we haven't really seen any losers for the whole month. So the first thing that comes to mind as well is a topic that is being requested on Twitter. Again, how do you handle your losses, risk management? Well, the first thing I want to kickstart with is if you have made a good profit. I've made a fairly significant amount of money from the calls, and even on Instagram Live, if you guys were following me, you would have seen we actually made around 1.2 BTC live on the spot as I was literally just messing around. I realized my BTC short was running on BitMEX, and bang, after catching that meltdown just a matter of minutes before really covering it in the Telegram, we did see the trade come through. So what I'm really planning to do with that is take a small portion out of those earnings and then across the Forex trades that were covered on FX as well, and I will just withdraw that and send it straight to my card, and from there I'll use that probably via Kraken. You guys, if you are using exchanges, I prefer to use Kraken for fiat withdrawals, or of course Coinbase. Very simple stuff to use as well. Simply I'll just send the crypto over there and press a withdrawal straight to my bank account, and it's pretty much simple. And that way there's a psychological implication in trading where people are so desperate to flip accounts, they're trying their best to just continuously grow an account and compound growth over and over again. The problem is you're putting yourself more susceptible to further risk because you are just increasingly reinvesting that capital over and over again, but you'll never get expressing gratitude and actually giving yourself a gift for the hard work of earning that money. Now, when it comes to trading, it isn't necessarily hard work, so to speak, as a labor job or a 9 to 5. The money comes relatively easier. However, the psychological implications, the stress, the actual turmoil on the brain and the sheer focus that it takes, those eye-burning chart hours that are spent learning to understand charts, they deserve to be rewarded. Otherwise, there's no point in actually trading, in my opinion. Like, why would you just continuously grow an account? That's still considered greed to me, in my opinion. You should, if you're not willing to take profits after every single trade, even a small portion, which can really add up over time, by the way, I think the best thing you could do is every time you hit a certain target, just let's say you grow an account from 5k to 10k. When you hit that 10k milestone / threshold, take out a grand or two, whatever it may be you're comfortable with, leave a bit more capital in the account, and you have a safe profit taken from the account as well, and from the overall trading experience. So that's one way to actually kind of counteract as well your risk and your losing kind of streaks, because when you have a losing streak or when you follow a losing trade after a few winners, when you've actually taken that profit to your bank account, you kind of look at the loss as insignificant. There's a lot less impact and stress on that specific loss when you have at least subtracted and extracted some form of profit from the market. The psychological implications are much more beneficial for you, and it just helps you kind of enjoy your trading experience by taking some profits off the table. It's very pointless trying to grow an account, but have nothing withdrawn from it, because what if you do end up blowing it all? What if you do have another losing streak? You've potentially lost hundreds to thousands or hundreds of thousands of dollars profit without actually subtracting even the smallest amount of profit from a trade. So that's one thing that I like to stick to. It's one thing I'll be doing, and I'll very likely be documenting the actual withdrawal via a crypto debit card. I'll be doing that for the CryptoWZRD platform and the course, which is releasing very, very soon now. I will be potentially doing a video for that, actually showing you how I spend my crypto profit straight to my bank account, and then I will be likely getting my McLaren wrapped to match the Wizard purple. And I think I'll fully document this as a actual lesson in the course on how to be your own bank in cryptocurrency. Now, I know I get a lot of questions on tax implications and this stuff, and guys, I'm not a financial advisor. I do not have the necessary regulatory certificates and all that stuff for tax advice. That is simply down to yourself to find an accountant and simply just check if it's the, let's just say, UK go and check HMRC, go and check what the relevant regulations are and the current rules are for cryptocurrency taxation within your region. There's no specific person you should be taking advice off of for tax. I have an accountant that handles that stuff, and if not, I already know the implications and how much to put aside, pretty much just treating it like capital gains tax. It can really depend on where you are located in the world, and unfortunately in these scenarios, Google is your best friend, and pretty much just calling the local authorities, I guess you could say, for your specific region to kind of figure out what the taxation implications are. But I wouldn't really try and take advice off someone that isn't 100% professional in that specific industry, and I am not an accountant by any means, so I wouldn't really like to give false information as they're specialists for those specific sectors. I'm more for a charting, educational, and all of that kind of content. I do not really wish to go down a route of giving tax advice that may not be too sufficient for all of you. So just take that into consideration. There, of course, are tax implications, but right now, as an overall kind of grounded region for the crypto market, there isn't too much of a tax implication in terms of it's not really being considered just yet. It has been dictated, but it's still a grey area, and even most accountants do not know. So just make sure you are keeping a track of all spending, and as long as you are keeping aside a specific portion in lines with capital gains tax, you should be okay. And as long as you're keeping that pot ready to pay the tax, you are all good in that essence. So moving forward, let's go over to Twitter to see what some of the requests have been. There was an interesting one, which is risk management, and I think it's actually a very important topic that I want to get into. So risk management. There is a very fine line in risk management and a very weird staple where you should only be risking 1 to 3% of your account. Now, there's a big divide in this and quite contradicting, because I am going to tell you that that is in fact not the truth to some extent. There are different methods. There is more risk you can take in the market, and there is just weird ideology right now. Well, not right now, it's been long standing for ages, where every single mentor or page or educational website, whoever it may be, that's providing trading advice, they stick to this same staple of 1 to 3%. Now, do not get me wrong, that's great when you're beginning off, and it's absolutely essential until you at least have a year or two's experience in the market with consistent profitability and incredible risk management. Even on a 1% trade, your risk management and your trade adaptability should be optimal, and you shouldn't kid yourself before trying to take further risk. But I think what's happened is it's become an ideology that it's the same way when you go on crypto Twitter and you have like BTC maximalists just fighting against XRP fans. It's just the same principle where people are just regurgitating information that they haven't actually bothered to research themselves. Now, for me, I feel that if you are confident in your trading and you understand your skills and you understand risk management, there are definitely implications where you can increase your risk. And I do not see anything wrong with actually increasing your risk to 5, 10, 15% on specific trades in specific criterias with specific confluences. This doesn't mean you win a few trades, you get a bit cocky and start trading 15% every single trade. Absolutely not. That's outrageous, and you will just lose your capital. And again, I do not even suggest doing what I'm saying now. This is only down to your specific means. This is more to say it is possible, and I do this myself frequently. Only the other day, I did turn an account from 8,000 to over 25,000 in literally a matter of a week by simply increasing my risk, but also managing my risk along the way of the journey. So a good example of managing risk along the way is I did just enter a position on BitMEX for 260,000 contracts split between BTC and Ether, 50 times margin, which leaves absolutely minimal room for error. You cannot slip up. If the trade goes against you, you're very likely going to get liquidated. So when it comes to BitMEX and trading with 50 times margin, that is a massive risk factor. And then they even have 100 times margin factor as well. So there is a significant risk with 50 times and 100 times, which means your entries must be optimal. Now, if you do remember one of the last Wizard Wednesdays, we covered manipulating yourself before the market manipulates you. If you start taking into consideration when you're in long trades, this is something I covered yesterday in the masterclasses as well. If you are in a long trade, you should still be looking at the downside possibilities and where stop loss hunts could be occurring. If you are short in the market, you should be looking above to see where you may be stopped out. If you do this and you start realizing there are specific regions which haven't been retested yet, you can Enter a trade, realize you may actually get caught out, close your trade and await a better entry, or enter 20% of your entry upon the first region you've seen, just in case price does rocket in your direction. And then if it pulls against you even more, you can add the final remainder of the position at the peak of the movement. And the beauty is, if you've preempted your levels and you understand exactly where price could be heading next. A good example was the Bitcoin meltdown from BitMEX, where price absolutely fell on BitMEX from around I think it was 5,470 around that level, and it dumped all the way to $5,000. Now, the first thing I'd done was close my trade. This was done on Instagram Live. It was very exciting in the moment. And again, with BitMEX overloads, it was a very panicky moment, spamming that sell button. But I closed my trade. But then when I looked at the charts, I had a euphoria moment where I realized I had this trend line plotted in advance anyway, exactly where price fell. And I started seeing price consolidate around this region. I then checked TradingView quickly. It fell in line with my exact analysis where I projected the possibility of where price will fall to. So I re-entered again with the exact same position size, as I had already doubled my account off one single movement, as I was using a tester account. Now, with that additional risk taken on, I've now doubled the account, 100% return on investment in one single trade in a matter of about 20 seconds. And within the next 30-40 seconds, I'd entered the same trade and made pretty much the same amount of money, equating to 1.2 BTC. I was just using a tester account, but I ended up flipping it in less than a minute, pretty much making over one Bitcoin and over £5,000 sterling in literally 60 seconds. And the only reason I could execute such a trade so rapidly is because I'd already told myself in advance, if price falls to these specific levels, which are almost the worst case scenarios, I already understand. There's no second guessing. There's no need for live analysis. When you are trying to, let's just say price goes against you, and you have that situation where you continue adding more positions because you're so confident it's going in your direction. The problem is when you haven't preempted those levels, you are so susceptible to a major risk in the market. You are opening yourself to crazy exposure that's unnecessary, because when price is moving, especially in the crypto market, tens of percent in a single second, when it's fluctuating on a candle, and you're there trying to plot trend lines, do all this crazy analysis, you are going to lose your money. Whereas if your levels are already set up, I'm talking support and resistance levels, just in case price breaks out to a specific level, way out the current rate trading range. You know, if it hits that level, you can confidently enter with a much larger position. And that's pretty much what's just happened now. So I had 200,000 contracts running, 50 times margin on BTC. It went into 15% profit. That was pretty much 0.1 BTC in a matter of seconds. I took the profit because the 4-hour candle, along with the candlestick analysis I've been working on, is showing me it's potentially going to reverse back, tap another level around 5,100 from a current level of 5,200. Now, considering the risk on a 50 times margin trade, if it goes down to $5,100, which is around $100 from where I entered my trade, I will lose 200,000 contracts, which is almost 0.9 BTC. Now, I'm already in profit. I do not want to be greedy, even though I'm targeting a very significant amount of profit. If I'm already in profit and the trade looks like it's going to reverse lower, especially with day trading, people do not realize you have to be alert and on the ball. If you are trying to trade cryptocurrency, you need to be alert 24/7. You need to be prepared for the worst case scenario. This is exactly why in the Telegram, there will be days where I just spam the Telegram with all these different theories. And even though we're covering a long-term direction, a medium-term direction, and a short-term direction, I'm still covering alternative scenarios for the intraday and intraday possibilities, so you're getting optimal entries. As crypto isn't about being right or wrong, it's about getting the most accurate entries possible. Even if you're using lower margin, you want to be on the right end of a spike. You do not want to be entering upon a breakout. That's a strategy that it can work, but I wouldn't really recommend it until you have experience. So a good example is now. I've now set an order, just in case it happens during this podcast, way below where my current entry is. So if price spikes to a potential manipulation zone, I've got the same contract size, around 0.8 BTC. And when it climbs back, if it taps that region, which I project it would do, straight back to my zone of $100 movement, I've made, instead of trying to potentially risk a trade going against me, I've closed out 0.1 BTC. And if it spikes down to my buy order and then goes back to my original entry price, I've made a whole Bitcoin instead. So it's one of those ones where you have to realize your ego cannot be involved in trading. The problem, not problem, but for me, it's actually worse because I now have 19,000 people in the Telegram. I feel heavily responsible for these people. Now, if I'm saying buy, or I'm saying I'm selling, or I'm saying this and that, I do not care about my ego. I do not care if someone says to me, you're buying now, you're selling, but you're going to buy back in lower. Why would you buy there? Because if I enter and the trade is now showing signs of a reversal, I don't care what anyone thinks about me. I do not care what the market thinks about me. I do not care what I think about the market. If I see a sign that is going to threaten my capital, I am out that trade and awaiting a better entry. I would much rather lose a small percent, 10%, or even break even than lose 100% of my whole position because my ego has told me, no, you've said you bought, now you have to hold this out. Absolutely not. The ego is the biggest destructor. There we go. How long has it been since this mess up? I don't know, but the first mess up has kicked in there. I apologize once again for my very strange wording. So the overall structure and destruction of the trades that can occur by simply just remaining onto your ego is not a very good situation to be in. I don't understand, because the reason most people lose in trading is because their ego is in control of absolutely everything. And I have no shame, and I will always be that way. If a trade looks a bit suspicious, I don't care what you think of me. I don't care about anything. I am here to preserve my capital. And this is the biggest factor I can mention in this, is when it comes to risk management, that is why I can risk much more and allow little room for error. Because if you're entering at precise levels that you've preempted, for example, manipulation galore, where the wicks are at a region that many people didn't anticipate, then you can take that further risk because you've entered at the very peak of a candle at a specific region you've stated. You do not need a large stop loss. You can actually lower your stop loss by sometimes even 3 times what it was before, meaning you can completely up your position sizes. And when it goes against you, if it does, your stop loss is so small, you've still lost the same amount as you would have on a normal trade anyway, except you've just entered bigger positions. So people don't realize this. This is something that I'm covering in the course at the moment. There's big different strategies and mindsets behind this. But if you're entering at the absolute peak or an amazing level, there is nothing wrong with even tripling your contract or lot size or position size as long as your stop loss is tight. That way, you are literally risking more on the position size. So if it goes in your favor, you're making triple the amount if you triple your position size. But yet if it goes against you because your stop loss is so tight, your losses do not exceed what they normally are anyway. So in essence, you're technically taking 3 times the risk, or even 5 times, 10 times, whatever it is you may be. But in the long run, you're actually not really risking anything. You're just risking more to potentially win more, but your actual losses will never exceed what they were before anyway. So another little I almost said mindset, that was a strange one. So a little mindset shifts like that can really make a significant difference, and people don't realize. It's just, for me, it's almost like granny tales, old like wives tales, where all these like villagers and stuff from back in the day have like spread messengers to each other. And it's just the same in the forex or crypto market or stock market. They always say don't risk 1 to 3%, like do not exceed it, you'll blow your account, this is risky, it's insane. No, you just do not know how to manage risk. And to be honest with you, if you're not too confident in taking those risks just yet, you're simply not a good enough trader to take further risk yet, and that comes with time. That's not an egotistical thing, that's not a bad thing. You have to accept when you are ready. Again, it will happen throughout your trading journey anyway, and when you blow your account or you get a margin call or you lose all your money or you have an amazing trade but you do not close it, these are all experiences that will occur during your trading experience and during your trading career, and these will shape you into a better trader and actually allow you to realize a little bit more about risk management. But unfortunately, the best way to manage risk management is to completely fuck up your risk management and lose money, and that's how sometimes the best people learn. I learned through many mistakes, continuously not learning my lesson, trying to be too greedy, but now I know how to take significant risks that are so calculated they still fit in line with risk management. And you can easily risk technically 15% on specific trades with specific confluences. I know it sounds crazy, but it can be done, but only when you are ready. And these confluences I'll be covering much further down the line, but I'm just here to break the mold once again. I do not like to stick to ideologies. I hate social conformity. I hate just anything that is a limitation. I've seen people flip accounts. I flip accounts myself. I know it's possible to exceed what people tell you. Because for me, 1 to 3% risk, again, it's all down to your own risk appetite as well. Why would I want to risk 1 to 3% on every trade? That's just not significant for me. It's not worth the burning amount of chart time I do to only risk 1 to 3%. I at least like to risk 5 to 10% per trade, because I know I will never lose 10 trades in a row. And even if I did, and I started realizing where the signs are, because I know how to adapt and improvise, I will never let the account get blown. There are times where, of course, accounts can get blown. That's simply a matter of life and markets, and it will happen to the best of people. Every single person you see online has blown an account at some point, and will very likely do to this day. That's just a very brutal, honest truth. It happens to all of us. I've blown accounts before, and I even blew one recently just trying to experiment. It's part of the game, and I have no shame in hiding that stuff. But moving forward, there was another interesting topic as well. I'll just try and find it, regarding I believe it was trading related as well. So what is the routine? So, okay, so since we're on the topic of trading and routines and stuff, let's just kind of discuss what needs to be done to actually be a day trader. Because there's two different ideologies here. You can be either the frequent trader like me, or you can also be like me in terms of you have long-term trades running, you have intraday trades running, and you're swing trading, you're doing all kinds of stuff. It keeps it exciting, and you're still keeping a fine balance of intensity and a lack of intensity. So when it comes to day trading, what is my routine? Well, every morning when I get up, or every night, depends on my sleeping routine. At the moment, it's pretty bad. I'm sleeping at like 5 a.m. and getting up at like 8 or 9 a.m. I can't really sleep too much right now. Insomnia is not fun. So with that current trading plan, I'm getting up in the morning. However, I am pretty much watching these charts every hour or very frequently, because when I'm day trading, especially on BitMEX, I need to be very frequently looking at the charts, because any sharp movement could completely change the whole bias of the trade. So people always ask me, shall I quit my job? Shall I just go trading full time? I've had a good winning streak. I'm ready to go trading full time. And I always say absolutely not. Do not be insane. I have found personally, if you are trading full-time like myself, and you can handle the intensity of checking charts 24/7, then by all means execute those positions. But when it comes to day trading routine for me, I'm at this desk 24/7 anyway, either updating Telegram, Instagram, Twitter, whatever it is I may be doing, I'm updating it. So I'm at the computer checking my charts anyway. But when you are working a normal job, you cannot, or when you are working anywhere in general, you cannot be checking charts 24/7 on your phone. And the most important thing for me is never mobile trade. I have learnt my lessons many times by trying to mobile trade. I don't care what they show on Instagram. I don't care about trading and traveling and people trading everywhere over the world. No, I manage my trades through my phone in terms of I analyze, I check, I monitor. I execute if I've already seen it hit my target level that's been preempted on a desktop monitor or a laptop. My trading routine is very intensive. I'm at the charts 24/7, which allows for day trading and swing trading of a maximum intensity. However, if I'm traveling on the go, I will only monitor my trades. I will literally enter trades before I leave the house. So even if I have a long day's work or I have to travel, as long as the trades have been executed off my desktop or laptop with full analytical breakdowns, I feel confident monitoring from my phone. I will never go out and enter off my phone or just analyze on my phone and trade. For me, that is not how you day trade. And it's just very, very risky, because you're not getting an overall image and outlook of the market. You're just trading from a small constraint of a screen. So I really wouldn't recommend that. And again, if you are day trading and have a current day job, stick to desktop analysis, laptop analysis, and executions and monitoring upon the mobile timeframes. And that goes for the question now, which is, shall I quit my job? Do I have to trade full time? No. So for example, with BitMEX, because there's more liquidity and it's a bit more insane in terms of manipulation spikes, I normally would like to be there 24/7. But for the likes of MetaTrader and Hugo's Wave Broker, when I'm using the XRP trade that I covered in Telegram, for those trades I am a lot less stressed about, because they trade more like the forex market or stock market. I execute my trades, I move my stop loss into profit, and again, you'll notice I've been showing you in the Telegram, the minute they start breaking out into significant profit, I move my stop loss to at least break even. If it's not in profit, it's in break even. Never be attached to a trade. This is a big problem that I fell into myself as well, and it's that, let's just say a trade starts breaking out into profit in favor of your overall trade direction, and you move your stop loss to break even. even. A big common problem, or a very common problem, is for people is that they see the stop loss at break even, and all they're thinking in their head is, I've waited a few hours, I've waited a few days, I've waited a week. What if this reverses against me and I get nothing? Well, it doesn't matter. I would much rather have a break even trade than it goes against me and lose. Because at the end of the day, even if you are calculating your risk, which yes, is fine, when my stop loss gets hit, I do not care. Because I've calculated my risk. That should always be your goal. And the goal is to not worry about your stop loss, but your goal is to worry about monitoring your stop loss to still avoid the loss. Because even if you have calculated your loss and you're happy to lose that amount in line with your personal risk appetite, your risk management, your trade balance, it doesn't mean you should let the stop loss get hit. And many people do not realize this. There are only certain circumstances which are normally out of my control where I let my stop loss get hit. And again, it's a whole egotistical thing as well, because if you're in the public eye and you're posting it, or even if you're just battling with your own ego and yourself, and you said to yourself, no, the trade's going against you, it's literally nearing your stop loss, and you know deep down you had a hunch that it was going to reverse. That hunch is telling you to move that stop loss closer to your entry to avoid a bigger loss. And this is a theory I do all the time, a bit like now. The trade is running. What am I doing? I closed it. It was in 0.1 BTC profit. I'm not going to complain. That was literally 0.1% of the overall move I wanted to capture. But guess what? If it now pulls down, I am going to feel so happy and relaxed knowing I'm not sitting there watching a trade just fluctuating in significant drawdown. It's just little psychological changes and separating from that ego. Because at the end of the day, I don't care about the ego. The ego will never make me money. Never, ever, ever. And that's why people always, like, sometimes you see people that trade very large accounts. They might make 200k in a trade, but if you stick to your ego too much and you get too egotistical, you're very likely going to get too cocky and blow all that money anyway. So you have to just really remain humbled and let the market do the work. Again, 2 of the questions I got in the masterclass yesterday is, what are you doing? Like, what are the questions? I guess you could say, let me try and think of the main one. It was regarding the candlesticks themselves. Like, what do you look for? How do you know? What indicators do you use? I use the candlesticks, like news announcements, fundamentals. This isn't like Forex. There is no fundamentals to watch out for. When they happen, it's already too late. The market's moved. But guess what? If you're looking at the candlesticks themselves, they've already factored in the news events, because insider trading, manipulation, people trading ahead of the news. If you're watching the candlesticks and you can learn to live and breathe within these candlesticks, everything you want to do is there. It's right in front of you. And I was saying this to Selena, who was one of the girls yesterday in the masterclass, and I said to her, it's right there in front of you. And I also, it's pretty much simple. You literally look at the candlesticks in front of you, and I cannot believe, this is something that always crosses my mind, how every single one of us, multi-millions of people around the world, are looking at the same candlesticks. We're looking at the same charts. They're posting the exact same movements, the hour, the minute. Every single increment of movement is identical, and we are globally watching this in synchronization. Yet how is it we all look at the chart so differently? How is it all of us lose? And that's because we're looking at everything but the candlesticks and the charts themselves. We're trying to look for moving average indicators. We're trying to use all this stuff. And this should only be a substitute to your actual trading. This should only be an addition, a supplement, so to speak. You should never fully replace what is right there in front of you. Look at the candlesticks, look at how they move. Try and imagine the candlesticks, almost create your own ideology of what those candlesticks represent. So for me, when I see those candlesticks moving up and down, as you probably saw in Wizard Wednesdays, I imagine that every time price is moving, it's like a plate of tightrope. People are battling like tug of war to see whose direction will win. And the more you see a progressive direction win, it's a bigger indicator that price is going to move that way. But again, lots more of that to be covered in the course. So overall, guys, I just kind of want to brush up this lesson. This podcast in particular is more about trading psychology. I don't really want to go too in depth, as again, the market has just been very boring besides price action. We've got the Bitfinex and Tether drama once again. And to be honest with you, you've probably seen on Twitter anyway, I am just expecting this thing to cause a big issue in the market. And I believe once we've potentially seen that climb of BTC to around $6,000, potentially even a little bit higher to retest that major trend line that's been broken, which again covered on Wizard Wednesdays, I do believe the Again, the technical analysis is already indicating this could occur anyway, but again, it's always a news announcement or some form of fundamental announcement that's used as the collateral or the blame for such a sharp movement in price. Whether it's up or down, there's always a correlating event, and I wouldn't be surprised if this happens in sync with the market hitting around $6,000 to $6,500, and then we start dropping below $3,000 again. I do think this is a massive possibility to represent and almost mimic the Mount Jocks scenario. I really believe that could be unfolding. So besides that really occurring in the market, very slow stuff. I mean, all the news announcements right now are just analysts talking absolute bullshit, projecting all these crazy prices and stuff. There's nothing too exciting. So to continue with this subject again is quitting your job and trading. I actually find when it comes to swing trading, for example, the Ripple trade I have running now, fairly good, risk-free. Stops are actually in profit right now. How am I handling that trade? Well, guess what? Because I'm working on the desktop 24/7 and looking at charts, but because I'm doing other things, I'm doing hobbies, I'm working around the house, I might be cleaning the house, I might just clean my kitchen because I'm bored. Having a day job, having a hobby, or having something that takes you away from the charts will be one of the most impactful assets and tools you can actually bring into your trading artillery. If you actually have a hobby or a day job or something to just distract you ever so slightly from the markets, you will be so surprised how crazy it actually is when you're trading. You place a trade and there's no longer that stress. If you've calculated your risk management, as I've covered already, you place a trade and you let it run. Now, what occurs from this point onwards? How would you, let's just say, manage the trade? Well, you wouldn't, because you're letting the trade run in the background. You've calculated your stop loss. You found your targets up and down. You do not need to actually worry about where the trade's going because your mind is so clogged up with doing other activities. You've taken your mind away from the trades. You're no longer sitting there watching it fluctuate, which is actually one of the biggest detrimental factors to trading, is sitting there monitoring it 24/7, especially if you're swing trading. If you're day trading, the same way I am for certain trade setups, and if I want to get optimal entries for myself and my followers, I will have to be there 24/7. But overall, if you are lowering your risk, because I'm going for a high risk trade, I want the absolute optimal setup. That's just how I work. Now, if you're just swing trading with a fairly low risk, all you have to really do, guys, is place a trade, let it run its course, go outside, close the laptop, go on your phone, go on Instagram, do whatever it is you want to do, go to sleep. As long as you are not sitting there watching that trade religiously, I promise you the trades will work out much better in your favor. Because what will happen is it might break out in your favor, it's in a bit of profit, and then you see it pull down, which is normal for markets. They will never just go straight up. In crypto, this can happen every now and then, but overall, you have to be prepared. So for example, now, maybe by the time this podcast is actually released to you all, Bitcoin might actually fall to $5,100 on BitMEX, which if it does, then that will be beautiful because I've almost manipulated myself in advance before I could get manipulated. The exact theory should hopefully come true. If it blows through the roof and goes straight to my target, then unfortunately, I've missed out on that trade. And again, there's FOMO. One of the biggest detrimental factors for even long-term investing. For me, I don't care. I don't care if I've missed out. Yes, you kind of look at the chart and think, for God's sake, it could have been a great trade. Guess what? There's new opportunities every day in the market. And I think I'm a very relaxed person in life overall. When there's issues in life, whatever may occur, I'm a very laid-back, chilled person. I have that fuck it mentality. If something happens in life and a mild inconvenience or a major inconvenience, I kind of just look at the sky, I sigh, I take a deep breath, and I kind of just go, well, that's life. It's just one of those things. It happens again. Like, when things go wrong, I'm like, here we go again. I don't know if you guys have seen that meme on Instagram. San Andreas is like, shit, here we go again. It's literally like that. You just crack on with life, carry on. And just remember, there's always new opportunities. If you lose a job, there will always be a new job present. If you lose a trade, there will always be a new job present and a new trade present. You name it, there is always an opportunity. There's a yin, there's a yang. When something goes wrong, there's always a positive to correlate, vice versa. So have that perspective with trading as well, and you'll very quickly realize that the aim of the game as well. Someone said this to me. So again, I showed almost 20k in profits in literally a matter of 3 days from the Forex and crypto side of things. And hopefully we can continue that moving into next week as well. But then the first thing people said to me is, how do you manage that kind of money? How do you manage your emotions? Well, it doesn't, the way, I can't even explain it. I don't care about money. And that is how it has to be. I view trading as a game. My game is to win the game. I want to win this certain level. Every trade I take, I consider it almost a level. It's as if let's just say Call of Duty. If you guys play Call of Duty, I used to be a big fan of Call of Duty 4 Modern Warfare. I honestly racked up, I think on the PlayStation 3, around 76 days on Call of Duty Modern Warfare. That was probably the most surreal period of my life, the good old school days. Missed those days as well. But look at that as let's just say prestige online. You're ranking up. Every prestige, I almost consider the trade as a prestige level, hitting a prestige. I want to complete the game. I want to level up. That means I have to get my trade right. I do not think about the money. The money is already premeditated, and this is also part of risk management. You must also and always, if you're looking at a trade setup, never enter market execution just off the bat like that. It has to be in line with specific regions. So for me, I've already premeditated and preempted my specific risk for that trade. So I've got my trade size ready. I've got my potential regions where it could meet. If it starts dipping to a different region, I will not enter the same amount of risk. If it doesn't land precisely where I want it to, I will reduce my position size and enter anyway, providing a much wider stop loss versus a tight one. There are so many ways to be dynamic and move with the market. And if you view every single trade like a game, your goal is to do what? Complete the game, or complete this level, or complete the mission. So essentially, in Call of Duty perspectives, if you want to use it this way, every single trade I take is a new mission in the campaign. My goal is to get this campaign completed and get it right without making mistakes. If you want to win that achievement for completing it on veteran, or you want to win that achievement for completing the round or the level, or completing that whatever achievement it could be. Let's just say Xbox, you get achievements. PlayStation, I think it's called achievements. To earn that achievement, let's say you must complete a trade without pulling out the trade, without actually monitoring your trade or losing, or you have to win 5 trades in a row. Treat it like a game. Focus on the trades themselves. The more trades you win, the money naturally follows. The more pips you gain in Forex and stocks and crypto, if you're margin trading, the more money you make regardless. The more you focus on how many pips you've made overall for the week, or how many trades you've run consistently, your money will just flow to you naturally in abundance. And that is the most important aspect for trading. So guys, I will end that podcast on a very solid note for trading. I wanted this to be a very trading structured podcast because it's been heavily requested on Twitter. It's something we're delving into even more in the Telegram, and I'm introducing more and more complex concepts that haven't really been covered by anybody else in the industry before. So I think it's very important that I am slowly but surely giving insights into how I view the market, because the traditional traders and the old school traders will look at me and be like, what's he doing? Why is he doing all this stuff? But guess what? For a whole month, I've proven that it works. It literally works by just being adaptive, by brushing aside the ego. If someone DMs me going, oh my God, you've changed your bias. You just said you entered here. Now you're waiting for this entry. That is correct, my friend. I am waiting for that entry. And if you want to enter there, where I've just realized is probably a very bad decision upon that candle closure, you can be my guest. But I am waiting for optimal entries. If the trade goes in your favor, congratulations. But I promise you, if you stick to that mindset, my friend, it will not work in your favor. So just trust me on this one. The more you open your eyes now, it's the same with all aspects in life. It's almost chart enlightenment. I'm trying to show you guys a whole new light of trading, a whole new concept, different methods, different tips, different tricks that people have not clocked onto yet. And I've been spending so many hours on the charts right now, just identifying different traps and setups, that it's really becoming a self-fulfilling prophecy. And once you can understand these candlesticks, I consider candlesticks hieroglyphics. Once you understand the hieroglyphics, you understand what the fuck the Egyptians were going on about. And the same way, if you understand the candlesticks, you're going to understand what the market manipulators are planning to do next. So, little perspective shift. Once again, I always like to end these on a little perspective shift and overall provide you a bit more of a rounded view on trading and swing trading, not just day trading, but trading and investing overall. So guys, I hope you've enjoyed this podcast. Hopefully it's going to be a bit of a significant wake-up call for you guys that are looking to jump into trading. And the most important note to end on is, if you're not ready to trade yet, just literally put in a few £100s or a few $100, even less, or just demo trade until you're ready. But to actually gain real sufficient experience in the markets, I do recommend trading live. Obviously do your demo first, practice, understand the markets, but even if it's literally $20 or $50, put that in the market and just experiment. A very small amount you do not mind losing, and use that to get practicing on live trades with live emotions, because even if you haven't traded before, but you are putting $50 into an account of your hard-earned money, I promise you the emotions would still be the same as someone who's experienced trading 5 million a pop. because when it's new to you and you're seeing real money that you've had to work in an office for, or labor, or whatever job it may be, when you're watching that money you've had to work a day for or a whole month for fluctuating through your own rational decisions, the psychological implications are crazy. And just watching even $1 or $2 go up and down, it gets exciting, and that's how people become gamblers. But then you learn to combat those emotions, and then it shifts to calculated. So all these little concepts I highly recommend trying and taking into action very soon, or if not, just slowly monitoring the charts and understanding. And guys, I promise you, I am here to make you, I can't even explain what the word would be for these kind of traders, the level of traders I'm trying to create here. I do not care about showing you I can trade or showing you how much money I make, because to be honest with you, that's fucking pointless. It does not benefit anyone. I can be the guy that all day long shows you loads of money, shows you loads of trades, and just kind of boost my own ego so you guys can be like, wow, he can trade. That I do not care about that. I care about making you guys the most optimal traders you can be. The more traders I can physically create that are successful, because again, the statistics are against us. My goal is to make an army of traders that are successful and beating those statistics. The competitiveness inside me wants to smash every single social conformity, expectation, or statistic that's against us into our favor. And this is the goal, and I believe within the next 2 to 3 years this can be achieved. So I will stick to this goal. I will ensure it happens, and hopefully this BTC trade falls into favor as well, around $5,100, and we have an excellent long opportunity to $6,000 on our hands. Now guys, have a great Sunday evening. I'm looking forward to the week ahead. Maybe some more Forex calls might be thrown in on my IG as well. Who knows? I'm feeling generous. Let's all have a good week and a killer week in terms of profits. Guys, see you in the Telegram very soon.